All right, diving into multifamily mortgages and how to finance multifamily properties. Let's first dive into definition of multifamily property. So you've got your anything that is 2 units to 4 units. Anything that is 5 units or more is going to fall into the commercial world and outside the residential lending of what we're discussing here. So we're talking multifamilies, 2 to 4 unit properties. Some of the benefits that come to mind about why someone would buy a property that's a multifamily is it's going to give them an income stream that's going to help with qualification, build their portfolio, give them some more stability versus their job income. Things to consider, it's not something to enter in of the faint of heart. You're going to have other people living under the roof that you provide and are responsible for. So I find that the people who are successful with it have either put together a team of plumbers, electricians, carpenters that they can trust and reach out to quickly, because you have to remember that you've got a human being occupying space that you are responsible for, and they're paying you to live there. So if you want to have good tenants who are happy in their space, you really want to be able to have a good lifeline of contractors who can help you when inevitably things come up with property, as they always do. Another item that's going to be really important is you're going to want to make sure you have reserves. Now, reserves, we're talking about money saved in an account that is yours, that's going to help you insulate against things like vacancies. You might have a time when a tenant loses a job and you don't want to be living month to month in the way that you live and also trying to provide the home. So as you enter into these, there's a couple things that are going to come up. The lender's going to require typically 6 months reserves, maybe up to 12, depending on the scenario, to actually get your loan approved. But it's also advised that you have, a little bit beyond what the lender might require at the minimum to insulate against vacancies, downturns in the economy, maintenance issues that may come up. You're going to want to have that available so that you're not scrambling when inevitably something might come up with the property.
Raj, real quick,
yeah.
Could you speak to reserves and what that really means?
Yeah, so reserves would be, when we talk about the definition of reserves, picture the principal, interest, taxes, and insurance on the property. So let's say that your principal and interest payments $1,400, your taxes are $500, and you have $100 a month for homeowners insurance. So put all that together. That's your PITI, principal, interest, tax, and insurance. Say that's $2,000. If so, 1 month's reserve would be that this reserve account, your bank account, checking, savings, had $2,000 in it. That's 1 month reserve. If you have $12,000 in it, you have 6 months reserve. So minimum is typically going to be that 6, but obviously the more you can have in there, the better. A good landlord is typically building into their evaluation of the property a reserve padding each month as they're taking in their rents. They're putting money into their reserve account. So their reserve account is always growing because over time they're going to run into those things where it's going to deplete a little bit. So it's important that as you're putting together your plan for owning a multifamily, that you're considering your reserves and how to build it a little bit each month. So as we're talking about buying these, there's a spot where now the road there's like a fork in the road where you're talking about, is this an owner-occupied property where you live in one of the units, where if it's a 2-unit, you live in one and rent one, or it's a 4-unit, you live in one and rent 3. In the best programs related to purchasing it, if you're going to live there, is FHA, hands down. And that's going to be, because the requirement's going to be 3.5% down. It's going to be a great rate. It'll have mortgage insurance and the upfront mortgage insurance, but it's going to be the best for entering into that ownership and allow you to keep some money that you have saved for those reserves that you're going to need, or allow you to get into it earlier. If you are going to not live in it and just have it as a pure investment property where you're renting all 4 units of the 4 unit or both units of the 2 unit, then you're going to want to go into conventional. It's going to be really the only option. And you're going to be looking at somewhere around 20% down, depending on the exact scenario. And that's going to be a great way to handle that type of situation. Anything you want to add into this section?
I would say, a couple things. So when we're talking about, generally I find when I talk to a client who just loves the idea of building this investment portfolio, if people want to always buy a single family house first because it just seems like what they should do. But if you take a step back and think about the bigger picture, if you really can see yourself being a landlord, owning a couple properties, multiple properties, you're handy or you have access to a group of people that can help you, manage and maintain the property, then maybe consider, as you said, an FHA loan first. Intend to live in the home for at least a year. Buy that 4-family with FHA because you can put 3.5% down. So you can get into this primary residence under the FHA rules, but it's really a property that has rental income. It's really an investment property, but you live there. So you could buy that first, and then after a year, a little longer, you save up a little more money, you have some down payment now to then go buy your single family home. You're actually allowed to vacate that multifamily at that point. So it's a nice way to build an investment portfolio by living in that FHA home first. It's tough if you try to continually do that, but that first time it can be a really good option. Versus some people almost work it backwards and they buy the single family first and then they try to go buy the multifamily. And at that point, now you need 25% down, let's say, to buy that multifamily home. So take a step back, don't rush into it, consult a mortgage professional so that you can kind of map out the best plan for you.
Yeah, and I've found that, normally people who look at the multifamilies early and use the FHA, if it's earlier in their life, they maybe haven't, they have a little more flexibility.
Might just be them or one other person, no kids maybe, right?
Things like that. So they might have a little bit more flexibility. I think it's just a great thing if someone's trying to really build wealth over time is to purchase that property with the multifamily that allows for that income stream and then move up as they go.
Yeah.
So that's a great summary of multifamily mortgages and what you want to look at in terms of whether you live in it or you don't live in it, things to consider, things to look out for, and how to best optimize that situation for yourself.